welcome to this video. This video is brought to you by Ecoholics. The topic of this video is 14th Finance Commission. So first of all, we are looking into the Constitution of Finance Commission. The Finance Commission is a constitutional body which is established under Article 280 of Constitution of India. It is obligatory to appoint Finance Commission, and by the President's order it was appointed. The current Finance Commission was started its work in 2013 January and submits its recommendation in December 2015. It took almost 2 years for the work done by 14th Finance Commissions. So the period of 14th Finance Commission is from 1st April 2015 to 31st March 2020. The chairman of this 14th Finance Commission is Y.V. Reddy. He was also the former governor of Reserve Bank of India. Now we consider a quick review of what is the main recommendation of 14th Finance Commission. The point to be noted is all the recommendation is accepted by the central government in totality. So now we coming on to the devolution. This is the major recommendations made by Finance Commission, because the duty of Finance Commission is to recommend the net proceed distribution of the center's divisible pool to all the states. So we are considering the two types of devolution, the Finance Commission. The first one is vertical devolution. It means that there is a divisible pool in which the center puts the money and all the revenue which distributed from the center to the states. So this consists of 42% recommended by the 14th Finance Commission. This is a revolutionary shift from the earlier Finance Commission. If I talk about the data, this 14th Finance Commission is considered 42% of tax devolution to all the states in totality. The 13th Finance Commission was given 32% of total tax revenue, share of total tax revenue. Before the 12th Finance Commission was 30.5, and before that 11th Finance Commission was recommended to share 29% of tax revenue. So we see that from 29% to 30.5%, from then to 32%, but finally this Finance Commission increased the tax devolution to 10%, that is 42%. So this is very important in the context of cooperative federalism, and the Finance Commission's recommendation was in favor of states. The reason I let you know that because the net proceed or the distribution of tax revenue is the major source for the state government, as the argument given by 14th Finance Commission. Another aspect is horizontal distribution. We need to understand how these two are differentiated with each other. Horizontal distribution or horizontal devolution mainly consists of the devolution of net proceeds among the states. So there are different types of states, like in terms of size, in terms of population, etc. We have such a huge states like Uttar Pradesh, Rajasthan, Madhya Pradesh, Maharashtra on the one hand, and on the other hand we have Goa, Sikkim, Tripura, etc. So there must be a formula in order to share in order to distribute the tax revenues to all the states. This comes the 5 criterias which 14th Finance Commission gave weightage to all these. First of all, we will look into the income distance. We all know that there is a regional disparities in our country. So income distance is a major part in terms of revenue sharing. If we consider, the 14th Finance Commission gave 50% of the total weightage to income distance. It means there is a difference in inequalities between states of relatively higher income group and relatively lower group. So what is the criteria, how we calculated? So the 14th Finance Commission took a formula that they took the average of 3 years of their GSDP, that is gross state domestic product. So they took the time period from 2010-11 to 2012-13, and they took the 3 years average of these income of every states, and after that they compared to the top level of GSDP state with their per capita income. So this is the brief formula of income distance. The 14th Finance Commission gave weightage of 50% to income distance. Now coming on to the population. Population is very vital since the first Finance Commission. The first Finance Commission gave 90% weightage to population, but it has been coming down, and now the 14th Finance Commission gave its weightage 17.5% to the population, and the population weightage is calculated based on the 1971 census of our country. Now coming on to the area is also very important because there are a large number of states which has a huge area and a smaller area, so there must be a cap for a smaller area. The 2% cap for the smaller states like Goa and Sikkim. Area must be calculated in terms of the huge size of the countries, and the many states are big and many states are small, so there must be a parity in terms of the net proceed distribution. If we coming out the talking about the demographic change in the next point, it gives the weightage of 10% to demographic change. The reason is very simple, because demographic change is occurring different states at different times. Our South Indian state is witnessing a population stable in this period, and on the other hand the North Indian states still having the high population growth and the relatively younger population in comparison to the national average. So the demographic change and the structure of population is also taken into consideration by the 14th Finance Commission. Now the last weightage given by 14th Finance Commission is forest cover. This is a new concept which never ever accorded as a part of distribution. The first time they included the forest cover also taken into consideration. Beside we are in a climate change situation, so the forest cover is currently stands at 23% of our nation is under forest cover, and we need to increase 33% because the standard rate is 1/3 of our total area should be under forest cover. So we are short of around 10%. So this is very important criteria of weightage given by 14th Finance Commission, because many states which has huge forest covers like Arunachal Pradesh or many northeastern state, and also the Madhya Pradesh has the very high forest cover areas, so there must be a opportunity cost for their industrial development. So forest area is very vital in order to distribution of the net proceeds. The another thing is grants of the states. So we are witnessing that the current government is promoting the cooperative federalism in the recent times. So that is 14th Finance Commission also recommended total grants to the local self-government, or that is the third tier structure of our administration. So the local bodies also given grants by the 14th Finance Commission, which has to be distributed by the state governments. So the total amount is 2,87,436 crores. The total amount is 2,87,000 approximately, which has to be distributed between the Gram Panchayats and the municipalities. The Gram Panchayats got approximately 2 lakh crore of that, and which depends on 90:10 the performance based grant. On the other hand, municipal bodies got 87,000 crore approximately, and they have the ratio of 80:20 on their performance grant. So this is a very vital impact in order to make the local self-government, they are self-sustained in their funds or in their revenues. So this is a good step in terms of the cooperative federalism. Now that's it. That is for the video. Please subscribe, share and like this video. I hope this video has helped you, and in the future we will make many other videos. If you have any suggestion, please drop in the comment box, and thank you so much.